233-year-old bank. One hidden account. 3 years of ignored warnings. By January 1995, Nick Leeson's losses had grown beyond anything Barings could survive. He needed one thing: a miracle. Instead, he got Kobe. He was now controlling positions larger than the bank could safely survive. And much of senior management still didn't fully understand the scale of the risk. January 17th, 1995. A massive earthquake devastates Kobe, Japan. Thousands die. Financial markets panic. The Nikkei falls hard. And Nick Leeson is massively exposed to the Japanese market. At that moment, most traders would cut risk. Leeson did the opposite. He doubled down, bought more contracts, added more exposure, increased the size of the gamble. While rescue crews were still pulling bodies from collapsed buildings, the positions got bigger. By February 1995, account 88888 was hiding losses of roughly £827 million, almost twice the bank's available capital. That night, Leeson left Singapore. 2 suitcases. A note on his desk. "I'm sorry." And then, he disappeared. But the collapse wasn't over yet, because London still had one last decision to make. Friday, February 24th, 1995. Barings executives finally begin understanding the scale of the disaster. Emergency calls begin immediately. Senior officials contact the Bank of England. Meetings happen behind closed doors all weekend. The goal was simple: find a rescue before markets reopened Monday morning. They approached major banks across London. Nobody wanted the risk, because there was one terrifying problem. The positions were still live. Even after Leeson fled, the market was still moving. The losses could still grow, hour by hour, minute by minute. By Sunday night, the situation was unsalvageable. Barings Bank was declared insolvent. The following day, ING acquired the bank for a symbolic price: £1. A bank older than the United States. Sold for less than lunch. Nick Leeson became the face of the collapse. He was arrested in Germany, extradited to Singapore, sentenced to prison. The public story became simple. One rogue trader destroyed a bank. But the official investigations told a more complicated story. The Bank of England inquiry concluded that Barings failed because of management breakdowns, weak controls, and repeated failures of oversight. Warnings existed. Audit concerns existed. Risk signals existed. Yet the system surrounding Leeson failed to stop the escalation. Leeson went to prison. Most senior executives avoided criminal prosecution. Many continued careers in finance afterward. That's the part people rarely remember.
Account 88888 wasn't just a hidden account. It was a warning about systems. Because systems rarely fail all at once. They fail gradually, while profits are rising, while bonuses are growing, while everyone assumes somebody else already checked the numbers. And Barings wasn't the last example. Société Générale, 2008. Jérôme Kerviel, billions lost. JP Morgan, the London Whale, Credit Suisse, Archegos. Different decade, different country, different account number. Same pattern. Too much risk, too little oversight. Too many people rewarded while the warning signs are still flashing red. Nick Leeson was the trigger, but the system around him loaded the gun long before the facts arrived. Somewhere tonight, another report is being generated. Another warning is being filed. Another account number is being ignored. The only question is how expensive it becomes before someone finally reads it. More buried ledgers. We open them every week.